Dot, 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 dot. Good morning, everybody. This is Grant from State of the Spark, and we've got a great show for you today. We're going to be talking about watching two particular crypto DAOs implode and the massive financial freedom lessons we're learning. And these are lessons you don't think you'd understand, you'd get normally, but there's people lessons, financial freedom lessons. We're going to be covering that. Also, we're going to be covering on the fact that how NASA has basically probability-wise, protected us from nearly all Earth-killing asteroids. People don't know this, and it's a little piece of potential cautious optimism. So we're going to be covering that, how NASA boops asteroids, and then we're going to be covering drama in the crypto space. And this is important for mainstream because the news has hit Bloomberg. And this is news hitting Bloomberg, which affects nearly all markets now since traditional finance is so tied to crypto finance. And before all of that, you know what we're going to do. Sneaky morning cup of gratitude. What are you grateful for this morning? It's been a crazy week. It's been a busy week. I don't know about you, but we've been so swamped and demand and work and clicks and all kinds of stuff. But we have actually come out on top. I feel like we've actually wrestled this thing to the ground, not only our business, but our partnerships, our relationships. It's just been a crazy week. But I'm grateful that we've been able to go with the people, the stakeholders that matter, connect and not lose relationship, go deeper in relationship, and elevate ourselves to also wrestle the practical things down. I talked to somebody this week and they called it the 3D life. And I was like, are you living in the metaverse? And she said, no, I mean the real life, the three-dimensional life, as opposed to this visionary life we try to live in so often. So that's what I'm grateful for. I'm grateful for the ability to converse, to communicate. And this is a big one. James Joseph, a good friend of mine, said recently this quote from, I think, the book Fierce Conversations, if I'm not mistaken. And he said this, he said, don't just seek to have a conversation about your relationship, your business. Critical, fierce conversations you need to have with stakeholders in all the important aspects of your life right now. We're talking about the total life experience, the TLE, fitness and health, healthy, happy relationships, work you enjoy, and spirituality. And you're supposed to have, you need to have, chances are, fierce conversations with people in each of those areas. And in order to have that conversation, you don't just want the outcome. And this was the quote from Fierce Conversations. The relationship or the conversation is the relationship. You don't just want outcomes from people. You want to be in relationship with people because people are the desired outcomes for most people's visions anyway. So that's what I'm grateful for. I'm grateful for good friends. I'm grateful for leveling up. What are you grateful for? Come on, speak up. Let us know in the comments what you're grateful for this week. If you're not grateful for anything, why did you bother? Why did you bother? I was pulled left, right, sideways, up, down, emotionally, pragmatically. And here we are still able to anchor together, share a cup of coffee, anchor our day, and wrap up our week together. That's what I'm grateful for. What are you grateful for? Let me know in the comments below. Let's talk about other news and booping an asteroid. Yes, there's some crazy news that was revealed to us from NASA, if you will, and I've got the article here for you. If you look at Netflix for 2 minutes, or if you follow any of the naysayers of the world or the nihilistic people of the world, they'll tell you, go watch the film Don't Look Up. Don't Look Up is a tragedy, a dark comedy, if you will, of human nature and how we hide in the sand or how we're so caught up in our daily living that when this impending doom shows up, no one can actually hear it. No one actually fathoms the fact that there is impending doom. And the message of this film is don't be one of these people who don't look up. Pay attention to what's going on around you, and please be more intelligent and more aware of the chaos going on around you. Don't get sucked into your memes. Don't get sucked into your world. I do suggest people watch it, but I don't actually subscribe to the spirit and the philosophy of this film. I do believe people are better than not. I do believe that there's a lot of good in folks. Oh, Sheila Hollowell up early in the morning. Buddhist teaching, your soul is a house with 4 rooms. Every day spend time in each of them. Physical, mental, emotional, and spiritual. Oh, I like this. I'm going to have to bookmark this because I need to meditate on that later. Thank you, Sheila, for this awesome quote. Sheila is just such an anchor point, I think. And honestly, Sheila, I've been looking high and low, and there's not many other anchor points for people to actually be doing internal inspection. So I appreciate you that you're out there doing this thing. So, in terms of booping these asteroids, averting an asteroid apocalypse is actually going surprisingly well. Science journalist Robin Andrews was actually researching of all the different catastrophes that could take out the human race. And for some reason, it's in the water to constantly figure out whether they're going to put us in FEMA camps. Okay, that's one thing you could worry about. Whether climate change is going to drown us all. Possibility, and it's not actually that uplifting and hopeful, but it's possible. Like, what's gonna get us next? Are they gonna is the market gonna collapse? Are they gonna put us in camps? Is nature going to take us over? Or the obvious one, is an asteroid going to wipe humanity off the face of the earth? We don't know. Elon Musk seems to think so. So let's plant us on Mars. Well, science journalist Robin Andrews actually has taken some time to research this, and she found out, hey, our ability to turn back a tornado, turn back a hurricane, turn back climate change, these are all really difficult things to handle. But Robin Andrews says this: you can't stop volcanoes erupting or an earthquake from happening or hurricanes. But an asteroid, technically, if you just flick it out of the way, the threat is gone. You see, the Planetary Defense Coordination Office has been working for many years to figure out how to prevent an Earth-ending, humanity-ending asteroid from hitting Earth. And technically, based on the physics of space, we could, in theory, if we moved early enough and could know it early enough, could actually repel and boop, just about any asteroid away from Earth. In 1993, some of you might remember, NASA scientists were keyed off to the fact that there was a massive series or asteroid that was going to hit Jupiter. And they knew that in July of 1994, this asteroid would impact Jupiter directly. And as they observed it, they measured it and they realized, oh my gosh, you could fit several Earths into the impact zone of this asteroid hitting Jupiter. And it raised a red flag all over NASA. Since that time, NASA says it's found more than 95% of all of the huge doomsday asteroids, and none seem to currently pose a threat to Earth. Now, this is a bold claim from scientists. Scientists have to know that there are many doomsday-sized asteroids out there. But in the algorithms, in the math, and continuing the search, they seem to believe they have found 95% of all doomsday asteroids that could be a threat, and they have determined that they are not in any near future a threat to Earth. Well, if you could boop an asteroid away from Earth, you could boop an asteroid into Earth. So we got to pay attention to that. That logic stands. But as it currently stands, only 1% chance of a city killer asteroid, which is much smaller than an Earth killer or a doomsday asteroid. A city killer asteroid is an asteroid roughly about, I think it's 150 meters across. And if it impacted in the middle of a city, yes, it could cause some damage. But there is only less than a 1% chance that any one of these even hits a continent in any given century. And now we've actually identified most of the dangerous ones, about 95% of them. So we still need to search the skies. We still need to come up with a methodology for actually booping the asteroids and getting them to go another direction. But it's not often you actually see the science and math that says, hey guys, I know you sit here and see Netflix movies like Don't Look Up and think, oh my gosh, this is a good thing that I could start worrying about. And grab on to the next thing you need to worry about. You can begin to trust the science, as they say, that we don't necessarily have to worry at least about asteroids. If anything, we have to worry most about humans. And we'll talk about that some other day. But I thought this was a piece of uplifting news. You can tell your friends, probabilities wise, there's a really low chance in humans given history, known future, that will actually ever succumb to a Earth-ending asteroid. So we'll have to come up with something else. I'm sure those who want you to be afraid will come up with something else for you to be afraid of. But just know that you don't have to be afraid of ice rocks floating through space, probabilities-wise. Let's talk about booping the crypto markets. For most of you who know my show Monday through Thursday, as I intermittently do it, is dedicated to solely human dynamics, mental freedom, time freedom, location freedom, financial freedom, so that you can ultimately get all that junk out of your head and focus on spiritual freedom. But on Fridays, I like to dedicate some time to crypto or technology, if you will. And crypto is the technology of the day. It's the season for crypto. Today, crypto is down 6% over last week. Yikes, that hurts. Down over 26% for the month. Ugh. Down over 40% over the last 3 months. But only down 12% over the last 6 months. And up 7% over the last year. The lesson? What's your time perspective? Are you a person who needs a moonshot immediately? You don't expect the stock market to do that. Why do you expect crypto to do that? Because of the myths? The myths of Dogecoin, the myths of Shiba Inu, the myths of the crypto kabillionaires who secretly built and hoarded piles and stacks of cryptos. They exist. We've met them. We've talked to them. But don't FOMO yourself around the kitchen. Don't fret. Don't wring your hands. There's still plenty of money to make. Don't worry if the market is down. Remember the old axiom, buy low, sell high. When others are fearful, be confident. When others are confident, be fearful. You've heard some of these. The global market is actually up. The entire global crypto market is actually up 0.12% over the last day. So don't listen to the fear mongers. It's all kind of about even. It does hurt out there. People who have thrown their money at all-time highs, and this is normal. Everyone around you is saying, don't get into crypto. Look out for crypto. Look out for that article in the Bloomberg newspaper. And you should be aware. But remember human cycles, my friends. They bought in when it was looking good, when everyone was confident. When someone said, I made a lot of money on Bitcoin in the last 3 months. Great. Someone jumped in and threw their life savings in because they bought high and sold low. Crypto doesn't defy human dynamic principles, and that's what we're going to be talking about today. A quick summary of some of my favorites for those who care. Ethereum's down only 2.17% today at around 2,300. ADA or Cardano is only down 2.63% today. That's slowing down. It's around $1.02. Link Chain or Chainlink is only down about 0.82%. It's leveling off right now at around $14.91. Decentraland, Mana, one of my favorite gaming cryptos, is only down 0.74%. So this morning, about break even, around $2.20. I'm going to be buying some more of that. I'm going to be buying some more of Chainlink myself. Sandbox is actually up 0.48%. And this is like the preeminent, Sandbox is the preeminent metaverse gaming token out there. And it's around $3.33. I'm going to be buying more of that today. If you're into crypto at all, tell me how your favorites are doing this morning. You can vent all you want in the comments. You see, I was on and interviewed on a podcast yesterday called Wi-Fi and Water. Really interesting podcast. Jarrett was fantastic. I love the guy. He's got a great view. Our episode should be coming out in a day or so, and I don't want to give away any of the juicy nuggets when they come out. I'll share the Spotify link with you. But it did bring some insight. He did ask me several questions, and it leads us into our lesson for today, 3 keys on financial freedom. But really, it's 3 keys on freedom, because if we're talking about money, we're talking about people. We're talking about economics. We're talking about a social science. Remember that economics is a social science. It's not a monetary science. It's not a hard science. It's how people are behaving. And if you look at money and you're only a technical trader, shame on you. Yeah, you might make some money. Good on you. But if you treat money cold and hard, money will treat you cold and hard. But if you realize that value exchange is an exchange of values, and currency exchange is velocity of values flowing between two people, and you realize that money is not cold and hard, it's actually, as Zig Ziglar said, warm, and it gets you what you want, and it could be a good friend. It could be a fire in the cold if you have it, It could be a new tire if you pop a flat tire. It could be buying a homeless person lunch. Money does not have to be cold and hard. Money is a technology. And like any technology, it only resembles what you bring to it. And so we had a really good conversation on the podcast, and I will love to share the link with you when it comes out. But he asked me one particular question, which leads us into our story today. Jared at Wi-Fi and Water Podcast asked me, Grant, I see that your portfolio mix, and for those who don't know, before the podcast, I put out there to my following how I'm dealing with my crypto investment, and I'm rebalancing. I'm not throwing the farm at crypto. Don't listen to these people. This is ridiculous. If I had $100 or $1,000 or $10,000 to throw at crypto, 50% would go to traditional markets, real estate, my business, the stock market. These things have treated me decently. Real estate has treated us very well in terms of our goals of cash flow. The traditional markets have grown. They're kind of stale, but we haven't lost anything in the stock markets, but we stuck to our principles, buy low and sell high. And in pandemic version 1, the summer of 2020, we invested a good chunk of money in that summer, and we made a lot of good money. And that was in the traditional markets. I originally got into crypto back in 2015-ish. Whenever crypto was around, I remember it was around $800. Bitcoin was around $800, and I got in then. And I've grown since then. So all these markets have treated me pretty decently. And of late, we've been throwing a ton of our pie in the sky reserve funds at crypto, and we've made some money. We lost a lot of money. I say lost, soft loss. We haven't sold at a loss, and we're still very bullish about the future of this money. That money, meanwhile, is staked and making us some cash flow. So net worth has gone down a little bit. Cash flow has incrementally gone up a little bit. But he asked me, Grant, I hear you say that, 50% of your money is going to crypto and 50% of your money is going to traditional markets. So basically TradFi, traditional finance, and DeFi, decentralized finance. And I gave him an answer, and he asked me, when will this change? When do you focus 75%, if you will, on traditional finance like your real estate or your business and 25% on crypto, or vice versa? When are you looking for when crypto is now making up 75% of your portfolio? And I stopped to think about this a little bit, and I gave him an answer, which I'll share with you when we have the link for the podcast. But the answer was not a trading answer. The answer was not a crypto answer. The answer was an investor answer. And it was this. It seems like with crypto, people are either desperate and they're not more desperate than usual. Remember, people were behaving for Wall Street bets, a traditional market move that happened last year. They moved on Wall Street bets. Some made money, and the myth is I made so much money on Wall Street bets last year. That's a good myth, and a lot of people jumped in on that myth at the peak and lost all their money. So why aren't people saying, ditch Amazon stock, ditch Robinhood, like they are about crypto? Because what we're seeing in crypto is actually just the same human dynamics. So that parallels to the question that Jared from Wi-Fi and Water asked me, and that was, when does your portfolio switch from 50% crypto and 50% traditional finance? When does it adjust? And my answer was, well, which of those markets is low and high? And my answer was we have to mature if we're going to actually obtain time freedom, location freedom, mental freedom, financial freedom, all of that, to have personal and spiritual freedom. To have these things under control. There is no secret Shiba Inu for most of us. Yes, there are cryptos that if you got in early, you could ride it to the moon. Yes, there are cryptos that if you got in early, you could make 60,000% annual APY. And we still are, and that's the story. But there's the story behind the story, which we'll cover in a quick second. But my answer revealed that there is not a technological crypto answer to when the right time to get into crypto is. There's a human answer. There's not a secret crypto technology that I just don't get. I mean, maybe there is for developers, but this is a market that's maturing. This is a technology that we still haven't had our head around. It's just that we have 100 billion Facebook Lives, 100 billion TikToks that are watching the front lines and telling us you could do this too. And that's true for some people, but not the average person. We just have instant information at our fingertips, and we want to believe that we too, and we could, participate in these markets and try to get ahead. But from a human dynamics perspective, it is no different than any other market. Now, I am passionate about crypto. I love crypto. For me, there is many opportunities. For you, there are plenty of opportunities. Are you going to be able to take advantage on average of 60,000% APY? No. Just like in the 1849, when the gold rush was happening in California, lots of people were flocking out there. Well, you know who made the most amount of money? The people who were already there and who discovered the early gold. B, the people who saw the opportunity and set up shop to build picks and axes. And then when the news hit the East Coast and then people started driving over, those people made, the first wave made some decent money. Not many of them became millionaires. And then the third and final waves lost tons of money. Now the reports of making 300%, 80,000% because I found the gold mine first. It took that news weeks and months to reach the East Coast. But with instant communication, that news is hitting us first. And there are many more opportunities for people in crypto, which we'll talk about probably on another day. But you need to start leveling off. And so this leads me into this kind of tees up my lesson for today of 3 major lessons on what's going on, because in the middle of all of this, there is a particular type of crypto called the DAO. For those of you and for my audience who are used to watching about small business, consider this just a vocabulary lesson on some of the crypto. For my crypto bros who follow me on YouTube and kind of know what's going on, you kind of know what's going on with this story. The story just hit Bloomberg, and you're allowed to look this up, of course, about a crypto that I am still passionate about called Wonderland Time. This Bloomberg article came out and revealed that a person managing this treasury of a thing called Wonderland Time. Wonderland Time is a DAO, a DAO, a decentralized autonomous organization. Basically, it's an organization that has taken decision-making power, in theory, away from any top-down models like a bank or bank boards or bank shareholders. It's gotten rid of all of that. And it's basically said, because of smart contracts, everything we do is up to you. And that's the spirit of it. The technology is almost there, but it's really difficult to actually implement in reality. And we're getting there. But the philosophy is already out in the wild, and people are already investing in these concepts, a DAO, a DAO. And there's been several of these, 2 in particular. Number 1, JADE protocol, which I followed, and you can see some of my videos on. And we've lost our shirt on that. And Wonderland Time, which we've also lost our shirt on. We've basically lost more than 95% of both of those investments. But let's track them. Good morning, Billy. I hope you're doing great. Boom. Billy, how do I say your last name? Weigel? I don't want to say wiggle, but maybe that's what it is. Hope you're doing great this morning, Billy. So as many of you know, I got invested in both Wonderland Time and still am, and JADE Protocol, and I still am. And as you know, I follow these protocols, and I will keep my investments going regardless of the news, regardless of the haters, because I have committed to ride out. Oh, Weigel, like Wyoming. Thanks so much, Billy. Billy Weigel on the show this morning. Thanks, brother. So I am going to continue my experiments with these because I promised you I would. I promised you I'd put my own money behind it, and I'm going to have transparency in that. And for those in the Discord and those in the Patreon, I'm going to do transparency. We're going to do an update on how our LLC investment is going and how the investors feel, and we're going to talk about all that. But for those watching today, to learn about human lessons and financial freedom lessons, I want to download some of this. So the news that came out was this. There's two tracks here. JADE considered itself this top secret, mysterious squid game, as they call themselves. We are the squid game of crypto. They had a rough roadmap. They would play economics games. They wouldn't reveal their staff, and the staff was often snarky. And in the early days, we thought this was a little endearing and a little fun. And we threw a lot of money into it, and it was stacking at about 1,000,000% APY, which is true, and it did happen and continued to accumulate roughly for about 2 or 3 months. And my numbers showed it. But meanwhile, the US dollar value of it was tanking a little bit. And then they underdelivered and underdelivered. Meanwhile, Wonderland continued to deliver. The price was going down, but the rate was going up. Their team was completely transparent, was doing Ask Me Anythings, was on YouTube, was sharing itself. Daniel Sestigala and his crew, and some of these people, some of them weren't entirely doxed or revealed. Doxed means to be revealed for my Rube viewers. Their team wasn't entirely doxed, but some of them were, and they had a very public face with Daniel Sestigala, who's involved in many projects like Popsicle Finance, the Spell token, the ICE token. You can look this up some other time. But Wonderland Time was establishing credibility. And it was really maintaining its APY. It was really maintaining its integrity. Meanwhile, Jade was playing games with people, and people were losing money. And then they asked them to exchange their tokens and do this hooty hoo, and we would lose money. And in the Discord, that snark started to turn mean spirited, and the community started to turn against, and trust was broken. And now the token is around $20, down from $900 down to $20. Now, they have since tried to regain trust. But it was even so far as they said, I'm going to reveal myself. I'm going to reveal my identity so that we can build some trust. And then he rickrolled everybody with his own he basically pulled the rug out from everybody and pulled a trick and didn't actually reveal himself or herself. Big trust breaker. These are not trust building moves. So Jade Protocol just simply crumbles and is a soft rug pull maybe over time. And for those watching, I am not changing my tune. I am now concluding it is a soft rug pull, and they have it seems like very loose intents to recover their project. Meanwhile, Wonderland Time has struggled and fought to evolve from being a DAO with a crypto token that's paying out high revenues. It's taking in high revenues. It's building up its treasury. It's got nearly $1 billion treasury. This is a serious player. If a company showed up in your town and said it was a new technology and had $1 billion to work with, you would pay attention. This is what's going on. For those who are new to the crypto space, you need to pay attention to DAOs. But DAOs are evolving, and how they're evolving is realizing that human dynamics aren't different, though the technology is new. And the human dynamics have several key players. Number one, the founders. And these founders have a technology, and they're very memed, and they understand at least the nerd audience who's into the tech, the cyberpunk and cyberpunk audience. They understand them. But now that they've been entrusted with billions of dollars, you can see all protocols struggling to understand, now what do we do? Now how do we manage humans? Now how do we manage a following? Now how do we take ourselves seriously? Now how do we mature as a venture capital company? They are, in many cases, falling victim to their own success. Back to the Bloomberg article that came out yesterday. Daniel Sestigala said, you're going to see some news come out today about one of our people, and we've asked him to step down until we take a vote. And it came out that Sifu, who has been prevalent in the Discord, is the Treasury Fund manager. And he has done some quirky things that could be justifiable in some circumstances, not justifiable in others. And it was revealed that he was part of a previous, he was a felon, actually. He was in prison, which I don't hold people's past against them myself, especially if they've done their time. But it does raise suspicion when you're in charge of large volumes of other people's money. And now there is suspicious activity. This person has now stepped down. There was a major loss of investor money in the form of liquidations. We don't know if some people could conclude absolutely this was the fault of this person, but I think a lot of people are upset and hurt because this person had a golden parachute when they didn't. And there's a lot of requests out there for people to reimburse liquidations. I don't believe in that. If you've invested, a liquidation, for those who don't know, is when you've taken a cryptocurrency, you've put it out there, you've staked it, but then the price falls below where you staked it at or where you bonded it at or where you minted it at, and the price goes below, and your borrowings get liquidated, as does your staked amount. And so you get liquidated. I believe if that you were in a liquidation, I am not in a single liquidation position because they're risky. That's on you. And whether someone mismanaged it accidentally or whether someone mismanaged it intentionally, that was the risk. And I don't believe in coming back on liquidations myself. That might be harsh, but even in this case of bad news. So this bad news came out yesterday. This crypto, Wonderland Time, used to be at $9,000, and we have watched it fall down to $300, $330 as of yesterday. So I point this story out. This is a watch story, and you're going to tell your friends, look at all this money lost. Well, we could go to any market on the planet, and show you how much money has been lost. But for some reason, Well, for many reasons and many known reasons. I don't mean some unknown reason. For many known reasons, crypto is the whipping child of today's losses. It'll be another market soon. It'll be another Wall Street bet soon. But right now, it's crypto. But there are three lessons I want to pull out from this story. You see, where I stand on that is this. I no longer trust Jade. A lot of people in Discord, and my Discord are asking me about, what about Wonderland? Are you selling? Are you bailing? What about Jade? Are you selling? Are you bailing? I'm doing this. And this is what's revealing these human dynamic principles about financial freedom from this example. Wonderland time, it came out that this person was a felon. This person has stepped down. It came out that this person had shenanigans. Other bad news. They were pulling out about $2,000 a week as payroll. They've also covered their own liquidations. Shame on them. Should they go to jail? I don't know, but it is just plain bad while investors were losing their money. Meanwhile, over here at Jade just crumbled, and they were making fun of their investors along the way. They were overtly ridiculing and overtly mean-spirited. Meanwhile, Daniel Sestigala has owned it as of his Ask Me Anything yesterday on Twitter, as of his Medium post this morning or last night. He has owned responsibility, has asked Sifu to step down, has committed to stick to the principles of the DAO and put the vote to the people of whether or not they should simply remove Sifu, whether they should close the project and reimburse investors. My disappointment, my great disappointment is that the more honesty that is shown, though mistakes are made, the more honesty that is shown in crypto, there's less tolerance for grace or mercy than there would be in traditional markets. And it's curious to me because they're making trust moves. And so for me, I'm going to keep my investing going till the end with Wonderland Time, primarily for this one reason. I believe that the trust moves that someone like Daniel Sestigala does versus, his name is Einstein, his handle on Jade is Einstein, who has literally ridiculed his people along the way. I'll still keep my investment going, and I will vote in the DAO to keep the DAO alive. So that's context for you, the viewer, on why these three principles of human dynamics. If you know me, it's not about money. We talk about money. We talk about crypto. It's not about crypto. It's about the underlying philosophy of a cautiously optimistic view of humanity. We have these technologies. Let's run with them. We have State of the Spark. Jarrett on Wi-Fi and Water Podcast yesterday asked me when I got into crypto. And the real answer is when I was looking for a currency for State of the Spark. The vision for State of the Spark is a non-location nation of people who live by principles of shared value. So we do investments with one another, and we needed a currency. This was before I knew Bitcoin existed. We needed a currency. We have the technology now. I believe in the human dynamic aspect of all of these experiments is far more important than even the winnings or losings. Now, we can make a lot of money. There's a lot of opportunities. Just follow my show. We're going to keep hitting awesome opportunities. I'm not poo-pooing that. But I want to make sure that I'm elevating you. I want to make sure that whether you make money in crypto or lose money in crypto, whether you make money in small business or lose money in small business, whether you make money in your job or lose money in your job, whether you're going for financial freedom or location freedom, I want to make sure that we're aligned, that you're elevating as a human being. And part of that is understanding human dynamics more. Here are the three quick lessons. Number one, people will organize in familiar ways regardless of the tech. By this, I mean, whether we're putting on Oculus and doing meetings in the metaverse. Jarrett from Wi-Fi and Water said this yesterday, and I love this comment. You got to check out this guy's podcast. He said, Grant, a lot of people think you're going to put these goggles on and visit with your friends there in the metaverse. He said, the more I get engaged with the metaverse, the more I meet my people and want to meet them in real life. He said, you're going to come to Columbia one day, and I'm going to come to Lakeland one day. And I'm like, dude, let's do this. I meet more and more of my people the more that the metaverse exists. And this technology is what you bring to it. Social media is what you bring to it. Yes, there's bad actors, but so what? Do you not have the mental strength to bring good stuff? So the principle is people will organize in familiar ways. What I mean is this. Everyone wants to get out of the banking system, but they gravitate and have invested their money, risked their money in DAOs, which resemble a bank. The major difference is the underlying technology allows them to have input every step of the way so that the organization moves. And I don't just mean we voted like shareholders. There's actual tech that's bubbling that they can't do anything with the money unless we vote on it and the vote says yes, and it opens up the gates and now they can move the money. In theory, that's how this trustless technology should work. It's almost there. It's not entirely there yet. But it shows me that humans, the investors, are still gravitating towards these democratic models. Human dynamics will still be the same no matter how deep into the metaverse we go. Human dynamics and human demand will stay the same. And another example is this. There's a protocol out there called Anchor Protocol. And Anchor Protocol says, listen, everyone's promising thousands % APY return, but we all know that that's not mathematically sustainable. We can't promise, like Wonderland Time or Jade, 100,000% APY and it continue to work well. It's got to pivot at some point into being a venture capital company, which is what Wonderland Time is hoping everyone votes that we do. But what Anchor Protocol did is Anchor Protocol came along and said, boom, we're just going to set this at 19%, treat it like a bank, and people will give their deposits, which they have. But they have to pay out that interest rate frequently. Their cash reserves are tanking and people aren't borrowing. So we're seeing a leveling off of interest rates that, yes, we want to believe in 100,000% interest rate. Yes, we want to believe in Jade's 300,000% APY. We want to believe in this. We want to believe that you can go into DeFi Kingdoms, which you can, and stake your money at the bank in DeFi Kingdoms video game, which you can, and get 350% APY. You can for a while. The gold rush of 1849, those returns were possible for a while. You can go out and get real estate returns for a while until the market shifts. Just because it's crypto doesn't mean it's going to be propped up forever. I will keep investing as a philosopher, as an optimist, as an innovator. I will continue to invest even at a loss in these technologies. But as an investor in a different bucket with a different % of my returns, I am cold hard, and I know that I'm going to go deep into these DAOs for about 6 weeks, and then I'm going to pull my money. Why? Because human dynamics will always level set. And what we're realizing at a rapid clip because of our level of connectivity, we're realizing that there's an entropy. There's a standardized rate of risk and reward in our economics that we can get. So my first principle is this. People will organize in familiar ways. If you look at the way they're voting in DAOs, they're voting for it to act more and more like a normal bank, just regulated by the people. These ways of organization are human embedded, not just because we're used to it with banks. That's not the reason. What a bank looks like is a formalized, institutionalized version of what people were looking for before. Security, liquidity. We're organizing crypto this way too. So regardless of the tech, people will continue to organize in familiar ways. Number 2, trustless or not, people want to know, like, and trust the people they do business with. For those who don't know, trustless is another vocab term for you. For those in the crypto space, please tolerate this for just a brief moment. Trustlessness means we can do a contract and I don't have to trust you're going to do your end of the bargain. In crypto, with a smart contract, we can write the contract, write the code in such a way that when I do this, this automatically happens for you. And when you do this, this automatically happens for me. And if one of us violates, then the returns go back to us, or the money goes back to us. You can write very complicated contractual obligations that don't require you to behave. You could act like an a-hole and they get their money back. Or you could act good and everyone wins. This is what trustlessness means when it comes to smart contracts. The technology is mostly there, but it has not touched every aspect. Robson, my dude. Robson has the Hex Nation showing up. I'll talk about Hex later. I've been paying attention more and more to Hex simply because the marketing is prevalent. I need to look at it, Robson. To be honest, I am undereducated on it. So maybe in another feed, when I finish today's show, we could actually circle back and maybe do a Zoom or something on your take on Hex and what's going on and what I should be looking into. I've avoided it because I'm not into flashy marketers, but it needs to be reckoned with because I do believe that a token will win if it has good marketing. And Hex has great marketing. If you sit on TikTok for a half second, you're going to see something about Hex. But what does it say about the tech? Well, I know the story loops about Hex. I know what people are saying about the tech. I know what people are saying about scalability. I get it, but I can't see through the flashiness of the marketing. And that is a red flag for me, not a green flag, right? But I'm not a hater. I just haven't gotten into it yet. So I would be more than welcome. DM me, message me, and we could talk more about it. I appreciate you. So the second point is trustless or not, people want to know, like, and trust the people they do business with. Everyone in the cyberpunk community think it's awesome to have these alt reality handles, to have to not be doxxed, to be a mystery. And as I gave in the illustration earlier, Jade has maintained its mystery. Well, people begin to hate that, and it begins to become a trolling of your own supporters. But in Wonderland time, they've been transparent from the beginning. And I find, at least in me, it makes it easier to throw stones. It makes it easier to flush out people. For example, the Bloomberg article. We were able to flush out who Sifu is based on social engineering, a bit of research, and an anonymous person revealing who they were. I actually prefer that. So even though we have trustless contracts in the tech, I don't believe in this idea of total anonymity, not because I don't want to be anonymous. Of course I do. You get too famous and you're going to pay a price for it. Only if you're acting out of integrity. Only if you're doing shady shit. But if you're acting with integrity, which I believe Daniel Sestigala has acted with integrity for the most part along the way. I say that you could say, no, what about this and what about this tweet? Of course, I've read the tweets. I'm there. I still feel like he's doing trust agent moves by revealing who he is, speaking to it honestly, giving it his best, and still letting the DAO decide. Now, he didn't decide on this one buy. No, he bought AVAX without the DAO. Of course, he did that, and it made us a ton of money into the treasury. But the point for you to learn is that trustless or not, crypto or traditional markets, TradFi or DeFi, doesn't matter. People want to know, like, and trust the people they do business with. And the shakedown of all of the DAOs, Zeus over at Olympus Ohm, the shakedown will come out that all of these people for longevity purposes will reveal who they are, or it will eventually fall. This is human dynamics. You can hide only so long behind the crypto before it will fall. Absolutely. Now, just because you reveal yourself doesn't mean you'll succeed. I believe, though, if you reveal yourself, you give yourself a longer runway. So, number 3, if the first one is people will organize in familiar ways, regardless of the tech. Number 2, trustless or not, people want to know, like, and trust the people they do business with. And number 3, markets, because they are driven by people and human dynamics, will level off no matter what. There is a lot of opportunity in DeFi. You can be the bank. You can be the liquidity provider, which is brand new. One of the biggest innovations to DeFi is you can be the liquidity provider and see those returns. One of the biggest innovations is you don't have to be a millionaire to start a bank. You can go start a bank. You have to bring the marketing. You have to help people understand the tech. There's a uphill battle. There's a lot of more opportunities. There's a lot of new nuances. But the years and the moments of 300% return, 300,000% return, 3 billion% APY return, those will be flash in the pans. Please act on them if you can. Pull your money out early, please. But the markets themselves will still level off. By this, everyone's poo-pooing Bitcoin. If you watch Bitcoin for more than one season of a year, I've been watching Bitcoin since 2013. And there's a great TikTok circulating around right now, and it's completely sarcastic. And it's, oh no, if you watch Bitcoin once went to $1 and then crashed to 20 cents. And then there was another time where Bitcoin rallied to $20 and crashed to $1. And there was this other time where it rallied, you get it. It rallied to $1,000 and then crashed to $300. And the lesson to learn is that Bitcoin will always crash. So hold on to your dollars. And it's completely sarcastic. I think what we're finding is the average investor is getting so confused with DAOs, with the tech, with what's going on. These things are so poorly marketed that they will gravitate back to basic currencies. Bitcoin, it's a currency. They understand it. It's a large denomination. Bitcoin, it's a small denomination, Satoshis, and they can get that. Man, they might get Ethereum. You're going to see a market level off and a consolidation of the markets because of human dynamics. We don't give a shit about the tech. Somebody does. So where are the opportunities? Well, the opportunities are still there because in the early stage of every innovation, there's tons of innovation. There is a frontier of innovation going on with crypto that's unstoppable. There's a frontier of innovation in the metaverse and in gaming that's unstoppable. And in these frontiers, which we have immediate access to, unlike traditional finance, we can get a 300% return for a short term, but just be wizened as an investor. that even that new innovation will level off, and then move your money around into stabler investments like stable coins, like staking, or be super smart, like real estate and businesses. Don't think that you're a genius. I heard Chris Sacca, the venture capitalist, say, we often believe when we have a huge win that it's because we're smart. And when we have a huge fail, it's because of luck, bad luck. He said we need to invert this equation. When we have a huge win, we need to attribute it to just being at the right place at the right time and fortunately making a good call. And when we're failing, we need to attribute it to our lack of knowledge, a lack of understanding, a lack of maturity. From a human dynamics perspective, these three things I think are completely true. Number one, people will organize in familiar ways regardless of the tech. Number two, trustless or not, people want to know, like, and trust the people they do business with. I love trustlessness. I love that fact, but it's not about the anonymity. It's about the fact that I can get into focusing on the relationship. And number three, markets, because they are driven by people and human dynamics, will always level off. Now, these 3 points shouldn't disappoint you about crypto, because if we were doing a show on the 3 opportunities of crypto or the highest returns you can still get, I would be completely bullish. Absolutely. But this is about the human side and the human dynamics, which I think is immediately relevant. Listen, go out there and be smart today. Go out and close your week and level up as an investor. Why? Because I want you to have time freedom. I want you to have location freedom. I want you to have mental freedom. I want you to build financial freedom, but not because I believe you should have money, because I believe you should realize it's a dead end, and that should set you free to then having financial freedom, personal freedom, spiritual freedom. And why do we do any of this? Listen, folks, let me remind you of the mission: to ignite lives of explosive significance, starting with your own. Have a great day.